Professor of International Relations at Boston University. Welcome to the program. I mean, it's influence and reach, and it's trying to buy friends and influence in a region of the world that is dominated by the United States. Is that the assessment?
Yeah, the Chinese have really come out of nowhere in Latin America and the Caribbean. In 2005, they really had little to no presence in terms of investment. My authors and I estimate that in between 2005 and 2007 that the Chinese have invested $75 billion into the region. That's more than the World Bank, the Inter-American Development Bank, and the U.S. Export-Import Bank combined.
And this is sort of the Chinese theory, though, the philosophy. They have a very long time frame for their investments, and all of their foreign policy is basically an investment in their economy. We've seen them doing this all around the world, buying up oil fields, doing partnerships and joint ventures, and giving money and loans to countries the U.S. won't deal with. Why is it so pointed that it's happening in our backyard, too?
Well, like you said, the Chinese are really looking for things that they need around the world, and Latin America offers a number of key things. One, Latin America has a lot of commodities, iron, oil, and so forth. Chinese are going to invest in those kind of products and in the infrastructure to get those products to market, to get them back to China. The Chinese also want to get opportunities for their companies. Often, like in one of these Bahamas projects, when the Chinese get a loan there, they also tie the loan to contracts with the Chinese firms. Another thing is they want to get rid of a lot of their investments in the U.S. treasuries, which don't seem to be working so well, and diversify those. And finally, a fourth thing, which you find a lot in the Caribbean and in Central America, if you favor Taiwan in the United Nations and other places, the Chinese might give you some money to entice you to flip.
Yeah, that's buying friends and influence, no question. There's also this WikiLeaks from 2003 that reveals sort of an interesting theory, too, that China is investing in the Caribbean as a strategic move to secure allies for when Castro's Cuba turns over, meaning that you would now have China as a big player in the development of post-communist Castro, or maybe it wouldn't be post-communist.
Well, I don't really see it as a big security threat. I see it more of as an economic challenge. The United States and the World Bank in particular over the past few years has really followed the latest development fad, whether it be trade liberalization or privatization in the 1990s or small anti-poverty programs in the past few years. The anti-poverty programs have merit, but this is more what Washington says these countries need rather than what they want, which is infrastructure and jobs and industrialization. And if the U.S. wants to be a player again, we're going to have to reform the World Bank and engage with the Chinese.
Well, Kevin, to that point, these countries desire investment. You go where the resources are. If you're a company looking for venture capital funds, it's the exact same thing. And so China is making a smart move, and if the U.S. wants to step up, you got to get in the game, but all the debt won't let us make it happen.
Yeah, that's for sure. The United States and the World Bank in particular just hasn't been investing in things like infrastructure. And if you look around the region, Ecuador wants billions of dollars to develop its oil. Brazil, billions of dollars to develop its oil. Argentina, railroads and so forth. These things bring jobs and help with long-run growth. The U.S. just has been dormant, and the World Bank just hasn't been moving into this area. So it's a new source of funds for